In our world, we occasionally find good fortune when we come across an indicator that has more than one flavor. We've done a few of these in the past and felt that the original flavor we're highlighting today will certainly deserve some variations in the spotlight in the future. But we need to meet with the original first. We wrote the blog on the Aroon over 2 years ago. It predates the video profile series, and we freshened the copy, added new graphics, and included testing results. So after a few user suggestions, which are too many to mention, we're creating the accompanying technical analysis video. VP has opted out of this one given its popularity, but that doesn't mean we can't have a little fun. So let's get busy. The original version comes from a distinguished gentleman named Tushar Chande and appeared from the ether in 1995. The indicator we're using for our studies is the original 2004 version from MetaQuote software. Fun fact, the word Aroon is Sanskrit for dawn's early light and is named so in reference to its supposed ability to reveal the start of a new trend. If you don't already know what it looks like, it comes to us as a below chart, oddball looking two lines cross, confirmation indicator. As a refresher, we're putting up an image of the indicator, but we've changed the signal lines from blue and yellow to red and green. We'll zoom in on the indicator so we can demonstrate what constitutes a signal. We've got a section of the chart where we can see where the green crosses over the red, indicating a long signal. Looking up, here is the signal period in our subsequent entry. If you're using this as an exit, it looks like this, where you would have jumped out. Now that we're clear on that, let's take a look at the pound US dollar chart to see how this indicator reacts. Ready, steady, get your Aroon on. We'll pause here to acknowledge our first signal, which happens to be a short as red crosses over green. Here we go. Well, that was underwhelming. Looks like this would have been chalked up to a loss in our journals. No matter, this is what we're here for, so let's keep going with this next long. Alrighty, we've got a few interesting things going on here, so let's break it down. Okay, in this first image, we're identifying the signal period. Next is the entry into the long trade. Price is moving up nicely as our indicator shows good separation. Then price reverses, but not to our stop loss level, so we're still in the trade. We confirm that it's not time to get out because the lines haven't crossed. Remember, stick to the rules. Price resumes its trek upwards with momentum, where you've closed out the first half of your trade and the second part of it is in profit. Price reverses, and at this point, one of a couple things have happened. Either you're out of the second part of your trade from your trailing stop, or your exit indicator has signaled you to close the second half. And now we've got a new signal. If you were using this as your exit indicator, then you'd still have made a profit just testing this indicator as a standalone tool. Now that we've taken a closer look at that individual trade and all the exciting components, let's settle down and continue on to the next signal. I don't think that trade needs a lot of explanation. What a solid move down, and the indicator clearly did its job. Huge profits. We can see quite clearly that this trade was a loser, and that's cool, but what I wanted to point out was a snazzy characteristic of this indicator. Let's focus on the indicator as it relates to price action. We're going to close the gap between them for a clearer visual. What you see here is that price is going sideways. Look how the indicator is behaving. The separation of the lines have narrowed, and they're running parallel. Does this mean it's time to exit? Not necessarily. Remember, you're either using an indicator or your stop loss to close your trade. Okay, so pocket that pro tip and let's keep going. Another small loss, but notice that price is still going sideways. The indicator is doing what it's supposed to. Also notice the formation of the two signal lines. What else can we say? We live in a culture of memes, so yeah, I'm going to recycle a few. Alright, enough of that. Let's get back to class and carry on. The last 3 trades probably would not have been taken due to market conditions, but since we're just testing, you most likely would have recorded 2 or 3 losses. This last trade was met with a lot more volatility in the market. That strong push up right after the signal would have resulted in a successful and profitable trade before price reversed with a vengeance. Even though this indicator is from last century, it's still got legs and we had some fun with it. We found a host of variations which we haven't researched or tested yet, but we're looking forward to the adventure. If any of these newer variations make the cut, we and VP will be going forward bringing them to you in all their glory. Get this golden oldie from the Stonehill Forex Indicator Library at no cost. The link is in the video's description. We'd rather not, so we're just going to disappear. We've got this stuff to make it easier for you to get from here to there. Our only goal is to make you a better trader.